This is Matthew Kratters, Bitcoin University. Today I want to talk about Bitcoin scarcity, its utility, and its value. And this video is being made in response to a question from OGBQZE, Bitcoin University. I thought the entire reason Bitcoin has value is due to its limited amount, or am I just mistaken? We're talking here about Bitcoin's famous scarcity, 21 million coins, as everyone knows. But is Bitcoin valuable only because it is scarce? We can begin to answer this question by asking another question. Are all scarce things valuable? For example, one gray hair in a head full of brown hair is scarce, but not very valuable. Also, 5-leaf clovers are scarce, but also not very valuable in monetary terms. We can see on Etsy here, you can buy one 5-leaf clover for $3. Maybe it's just that 5-leaf clovers aren't as scarce as we believe they are. Unlike Bitcoin, it's impossible to verify the maximum supply of 5-leaf clovers. They're not durable, obviously. They rot or they dry up and break apart. 5-leaf clovers, they could also be fake. They're much more difficult to verify than Bitcoin. 5-leaf clovers could increase rapidly in supply with a little breeding or genetic engineering. Like 5-leaf clovers, cats with two faces are probably truly quite scarce as well, but not especially valuable, especially since they don't breed to make more two-faced cats, and they probably have above average medical bills, and they also scare the children. So it would seem that scarce things are not automatically valuable. My hypothesis here is that scarce things need to be useful, they need to be desired by people in order to have any economic value. If something is scarce but no one wants it, that example of a gray hair from some guy's mostly brown hair head, if something is scarce but no one wants it, then it won't have any value. So that suggests that scarcity is not just a product of supply. There's only one gray hair on his whole head. That's definitely the supply side of things. But this suggests that scarcity is not just a product of supply, but also of demand. That scarcity doesn't really matter if no one wants it. And scarcity is not enough. This thing needs to be useful as well. Now, Bitcoin is clearly scarce, but is it useful as well? Before we answer that, I just ask you if you're enjoying this video so far, finding it helpful, please help to support this channel's educational mission by hitting the subscribe button. That does really help. Leave a like, leave a comment, question, suggestion for a future video, and share this video with a friend or family member. So in addition to being extremely scarce, Bitcoin is also extremely useful. You can use Bitcoin to send economic value to anyone in the world without needing to ask a bank or corporation or third party for permission. And you can contrast this with PayPal, Zelle, Venmo, where you have to ask permission, you have to sign up, and you can be kicked off the network at any time. In addition, you can store Bitcoin yourself without needing a bank account or a brokerage account. This is great for the unbanked and the debanked. With Bitcoin, you can memorize 12 words and walk around with $1 billion worth of Bitcoin in your brain. And best of all, you can do all these things without needing to ask anyone for their permission. Sending Bitcoin, running a Bitcoin node, mining Bitcoin are all permissionless activities that don't require a license, certification, or registration. It's a completely open software protocol. You can just plug into the network. Lastly, you can hold your Bitcoin without having to worry about someone else creating a lot more Bitcoin out of thin air and diluting your savings. This is a huge problem with fiat money, of course, where money printing destroys the purchasing power of the currency over time, as has happened with the US dollar since the founding of the Fed in 1913. How is Bitcoin able to protect your savings from debasement, from the sort of money printing? It's that scarcity concept again. Bitcoin is scarce while fiat money is not. As Neel Kashkari of the Fed reminded us in 2020 that there's an infinite amount of cash at the Federal Reserve. This is not what you want to hear if you want your money to preserve its purchasing power. So Bitcoin is both scarce, useful, and valuable. Bitcoin is valuable because it's both scarce and useful, and Bitcoin's scarcity relative to fiat means that it will appreciate relative to fiat forever, and that makes it more valuable. A final note here, or a side note, don't fall into the quote-unquote intrinsic value camp. All economic value is determined by the markets. It's not a function of how much labor went into producing something. Karl Marx was dumb and evil at so many levels. It's not a function of intrinsic value because there's no such thing. If you're a value investor, you might say that a value stock has quote-unquote intrinsic value of $100 and it's trading at $50 and is thus undervalued. This is how that term intrinsic value seems to be used most often in finance. But this intrinsic value is just your more or less intelligent guess or model of the value that the free market may attach to this asset or stock at some point in the future. So even gold doesn't have any intrinsic value. Instead, when people say that it has intrinsic value, I think what they mean is that it has industrial demand for electronics, for example, and then it also has monetary demand, which is gold as money, gold as jewelry, as a store of value. So when people say that gold has intrinsic value, what they mean is that it has industrial value. But if your money has some industrial value, then it's an inferior form of money compared to an asset that has a purely monetary value. Dual-use money like silver and to a lesser extent gold cannot provide you with a clear window into the price of that money, since that price is being partially determined by industrial demand for the commodity as an input into some industrial process. And so we can see here, when it comes to valuing silver, call it 85-90% of the value of silver comes from industrial demand, is driven by industry, and only about 10% is the monetary premium. So the premium above the industrial demand, to the extent that people want to use silver as money. Gold is the inverse, where only about 10% of the demand comes from industrial demand, and the rest is just the monetary premium that people attach to gold. So if gold were to be suddenly demonetized overnight, you would expect it to fall 90% in value. It would fall straight down to its industrial value level, whereas Bitcoin has no industrial demand. It's not an input because it's not a physical commodity. It's not an input into making things. And as such, it's a very good barometer of the price and value of money because it's 100% monetary premium. So if your money is useful for something else, for example, if you're using copper or silver, it's actually not very good money because it doesn't have a pure monetary premium. Again, there's no such thing as intrinsic value. So when people say Bitcoin has no intrinsic value, you can ask them, what's the intrinsic value of your house? What's the intrinsic value of a stock? You can't crack open a stock or a bond or a house and peer inside and find a tiny handwritten note that tells you its intrinsic value. This is almost how people talk about these things. There is no such thing as intrinsic value. There's just the value that a market places on an asset at a particular point in time. And at this point in time, in late 2024, Bitcoin is being valued by the collective judgment of the world's markets as an approximately $2 trillion asset. So when someone tells you that it's worth zero, you should ask them what they understand that the market is missing, that the market doesn't understand. Bitcoin has been valued north of zero for about 14 years now. So when someone says that it's worth zero, you have to ask them, why has it been misvalued for 14 years? Bitcoin's an asset that repeatedly crashes and then goes on to hit new all-time highs again and again and again. This is how the cycle seems to work. And this is an asset whose price history looks much more like Amazon than a tulip bubble. This is a chart of the tulip bubble. The tulip bubble in the Netherlands lasted only about a year. This is a chart of Amazon. It looked like a bubble in the late 90s, early 2000s, but then when you scroll out, you can see what the chart really looks like. This is a log chart, so we can fit everything on. That is the chart of Amazon. That's the chart of the tulip bubble. Very, very different things. If we take a look at the chart of Bitcoin, it looks much more like the chart of Amazon. Bitcoin is rapidly becoming the world's most valuable network, the dominant money network for planet Earth. And the sooner that you understand this and accept the reality and make the adjustments to your portfolio, the happier I think you're going to be in the coming years. And remember, this is very important. Maybe you shouldn't even think about Bitcoin as an investment. You should simply think of it as a stronger currency that you now have the option to trade into. And as you know, if you've lived in a country with a very weak currency, it's never too late to exchange a weaker currency for a stronger currency. So when you're selling your dollars or pounds or euros or yen or Australian dollars or Canadian dollars and trading into Bitcoin and holding BTC instead, you've actually moved from a much weaker currency to a much stronger currency. And it's not a trade or an investment really, it's just moving to a much stronger currency that will preserve your purchasing power over time. If you enjoyed this video, be sure to hit the subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks all for watching, and I'll see you in the next video.